Hello, good morning, Stonkmerica. It's 5 past the hour, and we'll be taking a look at some news. Then at 10 past, at 10 after, we'll be taking a look at GME. At 15 after, we'll take a look at some AMC technical analysis. A couple of teething problems here as I stand on all my wires. Tell you what, standing on this wire and pulling out of the mic just that little bit so it goes muted, and I need to set it up again. But big thanks to Frostcrest, of course, who's there keeping me aware of what's going on. Thank you so much with that donation to tell me I'm muted. Oh my goodness. So, welcome to the show. Good morning, Stonkmerica. Hey, thank you so much, Daniel Lesage, and thank you so much to Frostcrest. I hope you're doing very well out there, bringing in the morning with a cup of tea or a cup of coffee or whatever you have. Good morning, Stonkmerica. I'm bringing forward the opening time of the show as we go on here, aiming towards an 8 a.m. East Coast starting time. So we'll bring it in the morning with all my American friends, starting off a little bit earlier today, building up towards that. Good morning, Rocky Outcrop, says Ashley Lamb, and good morning to all of you out there. A nice little welcome from everybody. For our new mod amongst you in the chat, Epiphany Christie. Want to say thank you so much for having helped us all with the chapter titles and just generally being a very, 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 very helpful person. Oh my goodness. So thank you so much from all of us here to Epiphany Christie for being a new mod. Thank you for that and for the ongoing community that we've got here building up. So thank you, and a big shout out to everybody else, of course, that deserves, so to speak, the moderator status. Of course, so many of you out there do so much to contribute to the success of the channel. Well, it's 6 after, and we'll be coming back around to talk about GME technical analysis in just a few minutes or so. I'm going to bring up my main screen here, and you can see as well that during the show today, we'll be talking about things like SPY and what could happen if there is a market crash. Some of the things, of course, the prices to look to, the technical analysis, and we will be talking about all that sort of stuff as the SEC shuts down the DeFi money market here. $30 million DeFi money market shut down here with the SEC, and we've got to wonder, what sort of question does this open up about Gary Gensler? Well, we have a lot of faith in Gary Gensler, I think, don't we all? We're giving a guy an awful lot of leeway and a lot of faith and time here and patience from us all in the retail market, because this fresh-faced former MIT professor, of course, believes in blockchain, and we, as the, of course, shorted upon retail market, do believe that a bit of the old transparency might go a long way at regaining some of our trust, and Gary Gensler might be the guy to bring that forward. But when we see things like this happening, of course, we wonder if there are still some rusty cogs in the machine that is the SEC, or is there something else going on? Well, it's an interesting talking point. Gary Gensler himself has been saying recently in the media that he's been, or I should say the SEC has been distracted somewhat by the ongoing Gamestop saga. I thought it was a very interesting word, discussing this with, of course, yourselves in the community at some points. What do you think of the word saga? For me, it represents a story which is very much an ongoing and long drawn out affair. It's maybe not the most positive sounding word in the world, but I tell you what, it sounds a heck of a lot better to what a lot of other analysts and commentators would say when they talk about the squeeze having squoze 8 months ago, and this story, of course, being over. Is very much not over. And as we have got direct personal experience with, we know that retail, of course, is not selling these shares that we have our hands on. Anyway, this is an interesting story, and it's something that, of course, is close to my own heart as a crypto technical analyst as well. Without admitting or denying the findings in the SEC's order, respondents consented to a cease and desist order that includes disgorgement totaling 12.8 million and penalties 125,000 each for these two guys that were taking part in it. So we're not talking about something which is necessarily just a slap on the wrist. Mind you, maybe with the money levels that we're talking about with these guys, it wasn't like the SEC came in and completely crushed them. It's so I don't know. I think that maybe we should give Gensler a bit of a chance here with this one. It's now 10 past the hour, and we'll be taking a look at GME for a wee while. Don't worry about the news section. Of course, we'll be coming back and talking about news throughout the show as well. So I was thinking maybe perhaps around about the bottoms of the hour and the open of the hour, I can do a few minutes on news, and we can talk about that at tops and bottoms. Or maybe just a one section every couple of hours, etc. The show will be evolving over time. And now I'm going to move away from the SPY chart here just to bring up GME and take a look at how it closed out on Friday. Of course, that was the end of the week, and we are starting a new one right now. Getting a super chat coming in here from Drew Saul. Any tie to the GME regarding the 4 billion gold sell-off this weekend? By the way, great morning to you and everyone. Well, thanks very much, everyone. I'm sure massively appreciates that kind, positive message, Drew Saul. Now, that's an interesting discussion point, something perhaps that we could revisit throughout the week, because I have to say, I don't know, but I would like to find out. So the question that came in there was, is there any tie to GME regarding the $4 billion gold sell-off over the weekend? Maybe those are the sorts of comments that you could let me know about at some point if any of you do investigate that, perhaps in the Discord, where we keep the conversation going after these streams end. I don't know, Drew. I'm interested in it. I would normally tend to err on the side of saying that there's no correlation between any events, really, because that's just kind of my starting point. While I judge people on a 100% basis, and all that people can do is take away from that because I'm quite a positive person, when I judge things like correlations between events and markets, I start off at a zero and I try and build that picture up. We've got Brock if I could speak properly, Brock Mazuka dropping in 6.99 Canadian. Thanks, Rocky. Appreciate what you do. I appreciate what you do as well. Appreciate every single last one of you. So here we have GME, and we'll try and chat about this for a few minutes here, just to kind of summarize a few things that we've been looking at recently. So I have the chart up behind me, and I hope that you can see it fairly well. And what we have here, of course, is the weekly chart. Like I said, it was the weekly close. Now let's just take an eye here, a quick cast our eye to where that weekly close was, and it's crucially and quite importantly, we see crucial and quite important, Rocky. Wow, master of words. You can see here that the prices of this close came in just above. Now, just above. We're talking not a massive amount. We're talking here in the war, every yard counts, and we got just 1 yard. But that, as you well know, is the difference between winning and losing so often. And we have that yard here bringing us in above the closes that we had in April. That's kind of the main takeaway from the last week's close. I mean, yes, I know you're looking at this and you're saying, but the main takeaway, Rocky, is perhaps that we pushed down past a key level over here. Okay, I understand. The main takeaway is that we've got continuation from this other candle. The main takeaway is that even that the month was this big red candle, etc. Now, I know, there's a lot of those considerations to be had. But for me, right here on this weekly time frame, the main consideration is that in terms of this war of yards that we're looking at, every single dollar a yard in our favor, we're seeing that, of course, we got a yard ahead of that previous close. So we are actually now looking at the markets here in pre-market at 152 per GME share, and that's a little bit, just pennies here, but it's a little bit more positive than simply starting off at the other price, but it's also not miles away too positive, if you like, where it's going to put big gaps on the chart. So we're in an okay position here, actually, starting off the week. So 24-hour time frame and checking in with this low. I got a comment on Twitter. Shout out to whoever that person was. No, it wasn't Twitter. It was on a YouTube video. saying that there is no bullish divergence. Well, something to pay attention to, ladies and gents, is when I'm talking to the, if you don't know what time frame it is, of course, all of you watch along on the regular do know that I announce these things as we go. But for anybody that's just joining us here, I will announce what time frame I'm looking at. It is important. It does correspond to things like divergences down below. So we have the 24-hour time frame. Of course, that was that low coming in here, but we can see that over the end of the week, really the low came in of that weekly time frame. Shout out to Bad Mama Jamma in there at that price point on Wednesday the 4th, and we actually pushed up for the remainder of the week. So we actually had a positive end to that week, bringing us up above that closure point on the weekly time frame. That's kind of key to what we were looking at. And then wrapping up the GME analysis for just here, I'm going to take a look at AMC in just a second, bringing up the 4-hour time frame, and then pointing out, of course, the very obvious bullish divergence that we do have here, and it does look to be getting confirmed in there as real bullish divergence for just now. Although, of course, I would have a debate if somebody wanted to as to whether or not that is a confirmed local low quite yet. Well, okay, so great stuff. 15 after, wait, 15, no, 45 after, it's 45 after, oh, sorry, in my head it started at 1, but actually it started at half 1. UK time, 8:30 for East Coasters, right? So sorry. Okay, cool. Anyway, new format. I'm pushing on with that. It's 45 after now. We're going to be taking a look at the AMC technical analysis for 5 minutes in the way that we just took a look there at the GME technical analysis as well. Starting off on the weekly, we closed last week. We're concerned at the moment as to where we actually did that, and let's see if there's anything to be learned here. Looking at this chart, having just kind of picked up a couple of lessons already with regards to how these things can go, looking at the GME chart. So we're looking back and we're seeing that we did actually close lower than this candle over here in July, and that is significant, of course, but in terms of the overall shape of this thing, we didn't get an awful lot down here to give us that idea that that really was the low. Give me a second, I'll have a wee drink of tea here. Once again, good morning to everybody. Fantastic to see you. Thank you so much for joining me. This is the morning show, so we are doing a little bit of kind of summary stuff. This is actually quite light. It's not going to be too hard to digest. Broader concepts, you know, just getting the day started right. Being in that mindset, you know, so that when the momentum for the day kicks in, that we're in the best place mentally to capitalize on that. Going through 1 hour of the live markets actually being open before then, of course, ending the show and continuing any discussion over in the community, etc. after that. So that's how we're doing things today. Here's some 5 minutes of AMC technical analysis. Actually, the truth is it'll just be 2 or 3, and then I'll get around to checking how everybody's getting on in the chat, giving everybody an opportunity to go for a wee, perhaps even myself to go blow my nose, I don't know, and then seeing how things are getting on. And do let me know how do let me know at certain times what you would like to see as part of the show in this new format, and if you're enjoying it, because this, of course, is you and I here doing this together. You're as much a part of this as I am, so I want to know what you think about things. Let me know in the chat. So anyway, we've got the closure here. You can see on the AMC chart being lower than the weekly closure that happened in July. Now, obviously, that's not ideal. It's not what we wanted to see happen, but it's, of course, higher than the closures that we had, or it's actually the open over here at that gap area that formed on the charts back in June. Of course, that was when the 11 million shares were released. You know, making that comparison between the GameStop saga lows and what we're talking about is that's a significant period of time back where we're talking about those weekly lows that came in. They were a proper low. It was back then in April, and we, you know, really went through the process of establishing that as being the case. Over here on AMC, you've got that slightly different story. While we, of course, can look at it in terms of just this narrow picture and say that this low was lower than this low, I would like to point out that even just going back to when we had this last other low here in June, that we were seeing that coming in, you know, months after that low on GME, and scrolling back the way so you can see that the April time prices were significantly lower, down there at $9, etc. Now, of course, we know, and we knew even up at as high as $70, we still knew that it was possible and conceivable to go back as low as the $12 or $9 area. That's something that we're not going to be, you know, focusing on right here, right now. Really, for us, the question is a slightly different dynamic question. You can look at it ostensibly, same sort of thing, lows on the weekly, etc. Very different story, though, as you can quite clearly see with regards to this chart and where we are just now. And instead, the focus is really on that line that we're looking at there at $33. There's a few reasons for that. We've got confluence of factors like the Fibonacci retracement zones, etc. And those are the factors that we're really focusing on here and now, as opposed to where this weekly candle close was relative to its past. Now, we do talk in the world of these sort of so-called meme stocks. It's certainly not a phrase that I really ever use with regards to talking about these things. I'm far more respectful about what we're doing here, which is actually a genuine, legit, real thing. However, what I would say is, well, actually, I've said it all already. You know, really, I'm looking at that 33 area. There's good confluence in there, good reasons for that, and that's where we are. So what we have it here is that we've got 50 after right now. That means what we are about 40 minutes before the markets actually open up for the day, and we'll be going on to talk about things such as cryptocurrencies. We'll be going on to talk about things like lessons that we can have in the technical analysis world. We've got to have talking points about these subjects, you know, making it kind of some sort of value for people, as well as kind of the casual listener getting that sort of chat and morning start to their day, you know, the positive vibes that you get here together. So let me know how you're getting on. I'm back in the chitter chatter now, and I want to see what you're all thinking there. And I think I have missed a couple of super chat notifications that came in, so I'm just going to check in with them just now. And of course, that last one was Brock saying, "Thanks, Rocky, appreciate what you do." And then before that, and then just after that, we had Bad Mama Jamma chucking in a $5. Thank you so much. And back like Jordan wearing the 45. Well, hey, right, great, fantastic, Bad Mama Jamma. It's so good to see you. I hope you had a wonderful, wonderful time, of course, with your family at Disneyland Resorts, Florida. What fantastic looking pictures you were sending, and it seemed, you know, that you were having a genuinely nice time. Time's really relaxing, and of course, I'm sure you had a good time on a couple of rides yourself. I would have. Thunder Mountain, anybody? I don't know what they have these days at Disney, but when I was a kid, Thunder Mountain, I'd be going back there, some sort of pilgrimage for me. We are not messy. We are not leaving. Yes, exactly. Nobody's leaving here. That's the thing, Bad Mama Jamma. Really appreciated. And I'm seeing here that we have, yeah, lots cool. Nice one. It's everybody seems to be dead happy in the chitter chatter. Oh no, out of coffee, says Dead Money All Stars. I know what it's like. I'm actually getting a little bit low myself. I might take a couple of minutes during the show today to actually make myself a cup of coffee at some point. So I'd rather have that be scheduled. If that's going to happen, it'll happen right at the top of the hour, okay? So at the top of the hour here, when it ticks over for you guys on the East Coast of America to 9 a.m. and when, for me, it is 2 p.m., I'll go over and boil the kettle. So that'll give us every couple of minutes, I suppose, for anybody that wants to go for a wee and come back or any of that sort of stuff. To do that, Dan Wildo, Disneyland. Yeah, that's right, Disneyland. What a wonderful place, isn't it? You know, Disneyland is kind of like capitalism, at the capitalism resort, and that's a good thing, right? It's a good thing. It's one of the reasons why everybody that goes there has an absolutely wonderful time, and where dreams are made of. You know, can you imagine if it was some sort of socialism resort? I'm sure it would be a bit different. So how's everybody else getting on as well? Do be sure to let me know. And it's good to see you in there, Sunjo Kojak, my friend from Scotland. Frostcrest is saying, what are you saying there? Dollar OMI. OMI. So let's casually take a look at OMI for a second and see if anything is jumping out at it. What have we got in here? So it's Owens and Minor. Owens and Minor. Is that what he's got? It's like other Owens and Son. No, shut up, Minor. You're too young to have an opinion. But Dad, we should call it Owens and Son. No, we shouldn't. You're just a minor. You're just a minor. I've got it. We're calling it Owens and Minor. But Dad, no, shut up. Shut up, son. In fact, Minor. Right, that was how this company was created. We have a lovely upward channel here. If we do get support at this area, then wow, the beat just keeps on going on. We're going to look to this and say that have we got divergences with these highs? The MACD certainly showing it. RSI showing it as well. Actually, seeing throughout this channel, as you can see in the price action itself, rising towards the top side. We can see over here. Most certainly can, that we are, of course, going towards the downside on the RSI. Well, that, of course, remains scary in and of itself. What we'll be looking for here is to see if we actually do get a bounce here or not. This end point of this, if you're looking at it from a pattern point of view, is going to start to be very much a wedge formation if we actually do push up the way but don't take out our prior highs over there. Therefore, worst profit taking coming in at, well, you're going to be looking below 47. I'm not a financial advisor, none of this is for financial advice, but you'd be looking maybe or below, you're going to be looking over here towards, well, I don't know, really, it could go higher than the previous one just with bearish divergence. That would be kind of the thing. In it around about that $50, you're going to be taking profit on this one. I know that doesn't leave the biggest thing in the world in terms of a trade, but you're looking as well and saying that there's a massively satisfying 30% upward move potential. 20% would be, of course, the much less risky chunk of that 30%. I'm not a financial advisor, but that's kind of how you would be looking to trade this one. There's no hidden bullish divergence on these lows. RSI does crack down. It'll be taking out that neutral line, so be looking out for that. Will we find resistance at the edge there of the bullish control zone? In fact, a little bit lower than that and a little bit lower than our prior highs, etc., where that moving average is coming in at. Will we find that happening again if we do push up the way and get a healthy correction on this one? But looking at the charts, that's the weekly time frame. Maybe, in fact, I'm a little bit too zoomed out for that. Should have maybe looked at it a bit closer. How are we doing here? Big bearish divergences. Yep, okay. So if you're going to be conducting yourself in the markets here with an edge, looking at this, what is now actually is that wedge formation from before. If we're going to be looking at this in this section, and saying it's going to stop being a channel, start being a wedge, start to fail, then you're looking for that to, of course, fail at its 37 point. So if we take out 37, you can manage your risk, because, of course, the inevitable thing at that point is the further than 10% drop down in prices, taking us into filling that gap down below. That's going to need to be your risk management towards the top side. It is, like I was saying, perhaps 47 up towards that 50 area. You're getting a bit greedy beyond that in the meantime, unless you've got some sort of catalyst to push us on. The technicals showing us that this thing, of course, is going to experience some degree of profit taking fairly soon, and when those happen, you're seeing fairly big movements on this stock. Nice one. So how are we doing there? 3 minutes to the hour. We've got 57 minutes after right now, and everybody kicking along all right in the chitter chatter. Katie Babes says, look at Robbie's message. Okay, well, we've got instructions coming in from the crowd. Scrolling up, where's Robbie's message? Robbie, looking for Robbie. Rob Davis, Rocky, SS, Sassid, a wee, lol. I love it. Rocky Outcrop said a wee. Yeah, wait a minute though. Where's Robbie's message? Where's Robbie? Robbie! Aha! Hi, mate. Oh, all right. Would you mind checking out Economy? Oh, that's different. I'm holding bags. I wouldn't mind an expert. Let me know if I'll be okay. All right. Thanks very much. Well, we did Owen and Son there. Sorry, Owens and Minor. But let's see. What was this OMI chat there as trade spotting? The man, the myth, the legend, just walked through the door. I'm thinking it's a crypto. If you're going to be asking for cryptos, ladies and gents, please specify, because of course, as you can see here, I just did Owens and Son instead of Owens and Minor instead of this cryptocurrencies. Well, we can spend a minute on it though. Nevertheless, what I would be saying to you in terms of specification is you might as well take that as an opportunity. Do you want to take a look at, say, OMI versus USDT or OMI versus Tether? In fact, maybe I did that technical analysis the entire time without the chart on the screen, in which case, no big loss, right? Because it wasn't what you were looking for anyhow. I don't know, not too sure. Right, first thing I'd obviously say is this is brand new, so technical analysis on this one, fundamental analysis as well, do not work, right? Because it's brand new, therefore nothing works. There isn't anything. What? Yeah, I'm not going to talk about that. So even if you were to be looking at the team, for instance, and all that sort of stuff, you don't know anything at the time. So what we have is a chart that's opened up. It had lows down here at 0.002, highs up here at 0.004, but that was a big wick. It pulled right back down again to 0.03, and so giving up, of course, giving up a massive move back down, really, like, from these lows to these highs, it went up 72% or so. Then from the highs to the lows, it went down 20%. It's been ranging in here, mostly within the opening range of this coin's lifetime, and it's been going sideways. Of course, we've seen the prices moving down just here. Got to wonder, is this maybe just being published on a different exchange? Is there more history elsewhere? So I'm going to do you the favor of looking. It's not a favor, it's just looking there. No, that's OKX, and you're not going to get much. No, that'll be it. So we're within this range, moving down the way. So there's not a great deal to be told about this at the minute, but we can see a couple of interesting things that I think are most likely worth pointing out that maybe you might have missed. Namely, for instance, the hidden bullish divergence that exists between these prior lows. If I take out a horizontal line just here and pop it between these lows, just a little trend line, you can see that we are, of course, coming in with an ever so slightly higher low currently. Over here in the RSI, you're seeing that we're putting in a lower low. Hidden bullish divergence, would that be good if it played out? It certainly would be. Looking between, therefore, the highs of this little regime that we're in, down to the lows over here, and saying that we're right at the 236. Well, then there's your edge. Pushing past this point, where would you expect to see profit taking coming in at? Well, it's going to have to be 0.0032. I'm not a financial advisor, none of this is financial advice, but that's where we'd be looking to, because that's where the 618 golden pocket is. There's our wick from previously. Just going up there and imagining that profit taking would be coming in is fairly easy. Now, I'm not going to suggest to you necessarily what would be good, what would be bad, financial advisor and everything else, but I can certainly give you the tools that you need to be able to become that independent, successful trader, and that's what I'm trying to do over here. Hope that was a nice taster for you. And we are back again at the top of the hour. So I just want to say to everybody, if at this stage you haven't hit the like button, I would really appreciate it if you did. Actually, YouTube, I tell you, would appreciate it. It is the biggest lover of like buttons ever. And if you want to then, of course, pass this information on and bring other people into our lovely Morning with Rocky, Good Morning Stonkmerica show, then the like button is certainly one way to do that. So if we are what it does, it doesn't help my ego. What it does is it tells the algorithm, the YouTube algorithm, to pay some more attention to what we've got going on over here. So if I just zoom in on this one, no, not this one. That wasn't the one I wanted to bring up. Instead, what I wanted to bring up was this one. I think this is a fantastic story here, a fantastic piece of news, and definitely the sort of thing that we want to see happen in the world. Thank you then, therefore, to Gensler and the rest of the guys and girls involved in piecing together this idea. Because isn't it about time, ladies and gentlemen? The SEC approves NASDAQ's plan to boost diversity on corporate boards. Okay, so the NASDAQ, what happened here is NASDAQ came up out of an idea saying, we can help encourage diversity through allowing market participation, if you will. By thinking about it this way, what if people had the opportunity to publish who was on their boards? Where are they from? What's their backgrounds, their genders, their colors, etc.? Then the public would be able to vote with their shareholding and exercising their constitutional right to freedom of speech and everything else, like we do, of course, on a daily basis by holding the likes of AMC, GME, and various cryptocurrencies. What we're looking at here is the SEC approving NASDAQ's plan to bring that capability to the market. So what's actually going to happen is that companies on the NASDAQ are going to have the opportunity to tell everybody who is on their board, and then you obviously are going to have a better understanding of it, and that will inform your investment decisions, etc. So these rules will allow investors to gain a better understanding of NASDAQ listed companies. says Gary Gensler with regards to this, just like I was saying a second ago. So that's the approach to board diversity. That's really quite important, because the approach to board diversity by the board, who are, of course, the custodians of the long-term success of any company, you want to be knowing that their long-term visions and long-term plans are, of course, healthy, good, forward-thinking. And this gives people the opportunity to see that and see if the decisions that are being made are the best serving their shareholders. And that's exactly what we want to see. Diversity brings in so many good things, and of course is the fertile soil for innovation. So that's what we're seeing there. So thanks very much to Gary Gensler for that. Somebody else putting in the opposite side of the story here, saying that I'm disappointed that Gary Gensler is turning a financial regulator into a laboratory for progressive social engineering. Well, I think that that is actually one of these questions about where do you draw the line exactly. Finance underpins absolutely every activity that we take in the world. We are social animals after all. Where do the borders get blurred on that? I think that healthy legislation and healthy approval of positive ideas like that can only be a good thing and lead to better stuff in markets, especially for black and female America. About time, I think, is probably what we're all saying. So good stuff, Gary, winning back some of those brownie points. Maybe you did shut down some DeFi exchange, but well, hey, you're doing some good in the world. Excellent stuff. It's 5 after. We're just going to jump back on over to the charts and take a look then at a couple of different things. Now, we've already done GME and AMC technical analysis from a broad point of view. What I'm actually going to do just here, right now, is try and attempt to make some sort of cryptocurrency technical analysis clip for all the people who are not currently watching the show. So let's just see if I can do that. BTC USDT, bringing up the Bitcoin chart, and we'll spend 30 seconds or so here coming up with a few ideas about things that we can talk about. And I think probably it's worth reviewing this because crypto markets operate so quickly. And I, of course, was telling people what's going to happen in advance as ever, but time moves so fast that perhaps not everybody saw what was going to happen in advance. Oh, okay, great, cool, excellent. So Tracebot's telling me that he's heading off, and maybe I'll get a segment of him to use on the show later on. It doesn't matter. Maybe we will, maybe we won't. Thanks so much. I'll catch you later, Tracebot. Enjoy your eggs, and I'll see you later. Right, so worth reviewing this, right? I believe, okay, ladies and gents, and folks, my friends. See what we're doing. What we've done recently is looked at these crypto markets, fast evolving markets, right? They change. The analysis you've done is almost stale by 4, 6, 7, 8 hours later, even if it would have been, valid for the whole week in terms of traditional markets. So you have to be always nimble and on your toes. And what we were talking about before on Friday when we last did this was about the movement that could happen up to the 42 grand area, and saying it's very much there and it's what we were looking to happen. However, there was a different risk dynamic between that area and the area thereafter. In fact, you know what? This is actually already so good. It's all it needs to be in the episode. So I'm going to do that. It is, of course, 7 after the hour right now. Until 10 after the hour, I'm doing this crypto technical analysis section, so it's just another few minutes, and then another sort of 5-10 minutes after that, I guess we'll look at some altcoins. Sorry, this is the broader crypto section. This is the Bitcoin section that I'm doing just here. So I'm going to actually make this into a clip. The way that this works is that what I do is I film it during the live show, and then I publish it after the live show's done to the audience, that maybe would otherwise miss it. It's about trying to help people really more than anything. So my name's Rocky Outcrop, and we're taking a look at crypto technical analysis here just really quickly and trying to help people understand in a rapidly moving environment the important things they need to know about the crypto markets. Bitcoin, of course, being the daddy in amongst it all, and this is the Bitcoin chart. Now, as you can see, there's a big old white arrow on there, and yes, of course, we did tell all of the people in the community exactly where things will be going. And we discuss these things in the Discord as well, so be sure to join the Discord if you want to discuss them more outside the show with myself and others directly. But you can see there the arrow is so obvious, it speaks for itself. Okay, the prices were going up towards these higher targets. Now we still have a higher target in mind, and when you're trading, what you're doing is less about buying the underlying asset and more about buying and selling risk. That's a process that you go through as you're trading. And when we talked about this on Friday, the prices were in and around about this area, and we did say that we were aiming up towards the next region. That was in around about, of course, ding 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 ding, 42 grand. And you can see that's got that red horizontal line on there, and we were saying that there's obviously that's the move that we were looking for from these lows and the edge that we were trying to carry up to that area. That's what we were looking for. Bang, home run. Looking at that thing flying off, we were enjoying that. But entering that move towards the end of it was a higher risk profile, but still it was what we were looking to, and saying that you have, of course, that move, but when we get there, there could be a big inflection in the markets. And what we can see here is that the prices did come up and then form that candle, showing that it rose right up to there. And then it was after that period in time when it started to think, well, what am I doing from this point on? And we said that the next thing, if you're waiting for confirmation, was to trade from that area on for the next move. And that's what we can see having happened here. So the prices moved up, they came back down, they kind of confirmed in it around about 42,000. Now, of course, it was 42,380, but, you know, it went down to those prices, having been up at 43. You know, you got your grand off there, essentially, and then you could kind of say, okay, I'm in for this next stage of this move. We had that quick run up, that happened. It was obviously risky, not risky, whatever. But then this one is another phase, and we're aiming up towards 48 grand. Now, if we don't get there, it's because profit taking might come in here at the 1618 Fibonacci retracement point. This is something we talk about quite a bit. I'm not going to explain it during this episode. Just want people to know that the profit taking coming in here is potential in that 46k area beyond, you know, before we ever get to that 40, 48, 47 target. Now, that still is a target. Now, the reason for that being a target is because, of course, it's built off the back of the Fibonacci retracement points from the highs that we had in the markets down to those lows. What we're doing now is studying that minutiae of detail and really making it so that you're able to capitalize at every single high and low along the way, understanding why it's happening and what's going on in the market. I'm going to leave this with you at this point in terms of this particular section for you in terms of looking at Bitcoin, and I'm going to go on and look at other parts of the cryptocurrency markets. But just so you know, of course, this is being explained, and you can come along and look again for the future and in all other episodes of the show. The brief summary for here is that we're looking towards the next two targets, and we've already done the biggest, lowest risk part of that move. If we do go up towards these regions and kick on, then by all means, we are starting to get very positive yet again. Just cautionary note to be bearing in mind here is that, of course, we've got lows, highs, and if you do say that this was the prior low and you want to put an awful lot of weight on it, then you're also saying that you don't think that this potential wedge formation could play out, and that means that, of course, you're looking up towards the 48 and beyond area, but you're thinking that there's not going to be a pullback at the minute that takes out that prior low. Just be aware that prior low coming in there about that 42,300 area could be taken out as part of any sort of significant pullback in this zone, and therefore I would just quickly look to the low for in terms of the movement down. Yes, indeed, it would be back at that 40k round number. No surprises there on that front. So, yeah, Rocky Outcrop here. Remember, tell your friends, tell your friends, a friend of yours, friend of all of ours. Right, yeah, so that's how those sections work. It's now 12 minutes after, 13 minutes after, something like that, and I'll kick on and do some real quick technical analysis, and then I'll come back round at, what, 15 after? No, between 15 after, 20 after, trying to keep everybody informed with the times as we go along today. Maybe it's too condensed, I'm not too sure. working on this sort of stuff, but I'm trying to keep people informed of times. You can see that's my priority today, and being enthusiastic and all sorts of stuff, right? So at that sort of time, we'll come back and take a look at the charts again in a wee bit, right? Not the charts, the chit chat, the charts without the R. Take Rocky out of the charts, and what do you get? You get chat. Am I right? Great. Right. So here, yeah, and by the way, of course, we'll be going back over and taking a look when markets do indeed open at the traditional land stuff, right? So let's take a look at a couple of other ones. Ethereum, have gone through the Ethereum 2 upgrade. You know, a lot of confusion out there in the world for people. Worth pointing out, I suppose, if you don't know this already, Ethereum 2.0 is a 3-stage upgrade. So the reason why the Ethereum 2.0 upgrade, which happened already a year or more ago, was so disappointing was because that was just phase 1. The Ethereum 2.0 upgrade that's happened just now is much more interesting in terms of the impact it has on the network. And or has it been delayed? I'm not too sure, but this one that's coming up now is the second stage of 3, and that's the point that I'm making. And that's much more impact in the market and the network. And then, of course, the third stage is going to be happening in the future. Just so you know that there's 3 kind of parts to this puzzle, pushing on up the way here, and we're seeing that there, of course, on the oscillators down below. If I just bring up the moving averages here, or the RSI, the really stupid indicator, RSI, you can see it's got these lower highs, right, as the prices are putting in higher highs. A couple of interesting things to note, of course, is that we had a lower low on the RSI, but we didn't get a lower low on price action, so we know what that is already. We talked about it so far in the show, but you don't need to remember these things at any given time. Over the long course, watching these shows is training for you, and what you're doing essentially is putting your mindset in the right place. You're being open and receptive to new ideas, education, formats, ways of thinking, and then of course that settles in and you start to understand, and you know, it takes care of itself if you pay attention and are focused and all that sort of stuff. So, so you know, we can. I'll not need to explain everything as we go, and of course as well, I've got an education playlist which tends to explain quite a lot of the concepts I'm talking about here. And I'm in the Discord all the time, and others are fantastic people, wonderful people. So you can always check them out as well. So we've got this. So that was a hidden bullish divergence idea, and we pushed on up the way. Here's a Fibonacci showing us that so long as the prices are above $2,700, then it's absolutely fantastic. We're in there at $3,000. You can see I've got an orange line here. I've hit it a couple of times. It's no coincidence at all that that's there, but I didn't draw it on Friday. I drew this a long time ago, and you're seeing that not only was it a perfect profit taking area for us, it actually has been twice in a row, which is rather remarkable really when you think about it in terms of the quality of the analysis that we put out here on a daily basis. It's incredible because, of course, as you know very well, I didn't draw this on Friday, and where did the prices go? Well, almost to the penny. So it's remarkable stuff, and then we pulled back. And where was that line, by the way? $3,188. Where did the prices go to? $3,189. Yes, I know, it is incredible stuff, and it truly is, which is why more than 10,000 people have chosen to subscribe to this channel so far, and to all of those people, I want to say thank you so much, of course. Now, we did pull back down to the 236. In fact, we even went down as far as the 382, and that's, of course, nice to see. It is typical in markets, but so far we've not managed to push past our previous high. On a small term time frame, this little movement is probably going to look somewhat, you know, bullish in terms of its recovery from these lows, like we can see just here, but having unable to have taken out the 886 Fibonacci retracement point versus its previous highs. To put that in a simpler way, unable to have gone past 90% of the recovery since the loss here, of that point. But having done a few things, it's made it past $3,000. It's actually, you know, at $3,100. It's back in contention where we were consolidating before. It's consolidating again, putting us back in that position. It did it last time with bearish divergence on the way up, and formed a wedge as well at these tops. Like one top, 2, 3, 1, 2, 3 along there, and then up here at the bottom, you know, a dozen, and then we pushed down the way. Perfect, you know, it did everything fine there. Came down to a really decent area for a turnaround, near enough this 382 for pushing back up again. So everything looks pretty healthy overall on that front, because now we're able to put in these highs without putting in that divergence. almost. What we actually do need to do, of course, is to capitalize off of this consolidation phase in the here and now. I'm just talking about the here and now of Ethereum before moving on to talk about other things, looking at things on different time frames, on different assets. Yeah, so can we do that, and can we push on up the way one more time? Well, I feel like maybe we could with this one. However, there has been, of course, a general turnaround with these things. Yeah, so, but managing your risk, well, what this does is it opens up an opportunity for you to be able to manage your risk quite easily. So you'd be looking towards your previous lows in here, 3,100, and saying, because this is the previous low, an area where the DMI is turned around and come back to where there could be support at 30 before continuing on up the way, but we don't know yet. We've seen the MACD steadily drop off and go back down to the baseline of the histogram where there's no change between ups and the downs at that equilibrium point where there could be support, but we don't know if they're necessarily. We see the RSIs come down to the moving average. This is a 15-minute time frame, but same concepts apply in the bigger ones. Come down to the moving average right there where there could be support, or, you know, we could see a slight change in conditions if we take that out. So we're seeing these confluence of factors in here at this time where we're in consolidating, having put in lows with wicks before, that if they were to take out, you'd be doing one thing differently, two things differently, three things differently from what you were doing before. And what does that do? It tells you that you've got a heightened risk environment. And what are you doing? Well, you're buying and selling risk. And what's that heightened risk environment? Is too much of a change of risk, and therefore what are you doing as well? Your responsibility is to manage that risk. And if you manage that risk, then what do? Well, you become a successful long-term trader, right? So that's your Ethereum technical analysis in the here and now, and we'll move on from that. It is 20 past. It's 20 after the hour, and we can just do a quick couple of minutes of chat, give a little break for that one. Maybe I'll chuck in some Chainlink and Tezos technical analysis, another couple of cryptocurrencies before we go back to the market opening, and we'll be back looking at the charts, the market open before the freaking open, right? How are y'all? How you doing? How are you doing it there? I can tell you how I'm doing, right? And thank you, by the way, again for joining me today. I can tell you how I'm doing. I am tired, right? I'm tired. You can see I'm slouching in my seat. In fact, you know, if I was sitting properly, my head wouldn't even fit on the camera. So much tired am I that I, you know, allowed the camera to sink down a bit here. In fact, that's better, right? It just moved my seat down a bit and everything. That's how I'm feeling today. And this new way of doing the show is certainly taking a lot of energy out of me, right? So I'm wanting to have the positive start to the markets. That's what I want. It would be enthusiastic and lovely and kind if the market's kind on me, kind on probably all of you listening as well. Be kind on you, kind on me, kind on us of the markets to just start off with a nice day today. I think that's how I'm feeling. And yeah, let's just get the chat to catch up here on screen. So Minner saying, Tezos, can you relate swing failure to bullish divergence? Yes, I can. It's a swing failure is part of the whole bullish divergence. Sorry, bullish divergence is an intrinsic part of a swing failure, or indeed any divergence, bearish or bullish. What's that, Rocky? Well, you're looking for the swing failure to happen after you've seen the divergence. It's the divergences which show you that that's like the next step. It's a kind of a critical path that you're following along. So first off, you're looking to the lows. If you're looking for bullish divergence, we're looking to the lows. And we'll revisit this again just to get confirmation on the concept in a second here. You're looking at the chart and you're seeing it's moving up and down, right? And then it's going down and it comes up, and then it goes down further and comes up. And then you get those two down points and you say, well, okay, so the latest one, the one that happened most recently, the one that just happened there, is lower than the previous one. You look down at the RSI down below and you see it also moves with highs and lows, etc. And you look back and you say, well, the last low on the price, it corresponds to a higher low on the RSI. It's different. It's changed. There's a change here. And that in that change, in that lack of correlation, we get extra insight. So we'll take a look at that again then, of course, in a second. Coffee for Rocky, Jamie and Mum. Cheers. That's very cool of you, OJ. Really appreciate it. I do need a cup of coffee. Jamie, no doubt, will be buzzing having drunk some more of the Kind Coffee Company's coffee today. I'll have to get that P.O. box as well, by the way, for anybody else who wants to send anything to me, because that would be great. Jamie has set up a P.O. box. He'll probably mention it. You might know it already if you're in the audience. I should know it, but I don't know what it is. And then it'd be cool. You can send me stuff. So if there's any local businesses out there or anything like that want to get a wee plug on the channel, you could send me something and I could do that for you or whatever. And that'd be cool, you know, and that suits me. But when it comes to that coffee, what that was purely the Kind Coffee Company really just wanted to say thanks to us for what we do. And I want to say thanks to everybody in there, the entire family, because they're wonderful people. Right, excellent. Paul B, Jamie and Rocky, your hard work and format enhancements are showing. Well done. Thanks so much, Paul B. It's taken a bit of energy to do it. That's what I'm saying. Of course, I'm a very energetic and enthusiastic guy all the time, absolutely. But doing it in this way is a little bit different, and it's nice to be doing it right now, right here. It's coming up to 25 after, however, I'm going to be moving on. Thanks so much for all the good messages and the positivity in the chit chat, and I'll be coming back after I film this to look through and read the chat again. I do that for market research purposes, let's call it. Actually, no, I do that for society purposes and just social. I love reading the chat. I appreciate it, and all your messages are always well received. Thanks very much. Good to see you in the chat, TradeSpotting. Let's take a quick look just real quickly at those concepts, okay? So first thing was that we were going to confirm with that bullish divergence idea on GME, okay? Here, so on the 4-hour time frame, we can see that there was a low, right? There was a low here, followed by another low thereafter. Down on the RSI, we can see that there was a low, followed by a higher low. That is step one. Then we can say, where were the swing points in between? Where were the swing points in between? In this case, it's, of course, in this region just here, where we had those highs, as it happens. Those were the swing points in between. Seeing the prices moving up and then seeing the RSI moving up is what we would hope to be seeing right now anyway. And if we do take out the previous highs, we're changing a lot of things in terms of structure, etc. This pattern that you could be talking about in terms of a wedge, you know, breaking up the weight, etc. Looking at fake out territory. There's so much depth and detail that we get into. We look at these things, but just generally speaking, saying moving up at the minute would be good. Then we're looking and seeing, well, does the RSI take out these previous areas and then get this swing point that we saw in the past, and then for that swing point to fail, for this swing point to fail, with this swing point between the previous two lows on the RSI, where we had the low of the price coming in and the low of the RSI coming in, the prices in the RSI moving up came here to this swing point. It swung back around again and went down. The prices as well went down. The prices went lower than their previous prices. The RSI didn't go lower than its previous prices. It turns around and comes back up again. It's aiming back towards that swing point. Will the swing point offer up resistance and confirm, or will the swing point break and fail, and then the markets move past that point on the RSI, giving us an RSI swing failure following on from the necessary component of RSI bullish divergence at the lows beforehand? And then as well, will we see corresponding price action push past these zones? And then can we at that point relax when the next low comes in? Talk again, saying BTFD, as they say in crypto land, buy the some word that begins with F, I've no idea, dip. I don't know, buy the fat dip, I think it is. BTFD, buy the fat dip. So that's what you'd be talking about at those points, right? We've got 2-3 minutes before we get to the bottom of the hour. We can talk a little bit more then, do a little bit more news or what. No, wait, what am I saying? That's the market's open. Brilliant. 2 minutes, market's open. We'll get back round and check the other prices. So let's just see how we got what have we got? Not that there, sorry, Link USDT. This one, what have we got? $24, $25 here. $24 has been that next resistance point. Looking at those highs, seeing that divergence, MACD, seeing it there on the RSI, seeing the divergence on the DMI up above. Have we turned the trend around? Looking at the DMI to get a bit of an idea of that. Well, no, the ADX hasn't managed to get any continuation of strength during this negative period just here. Not really, and then there was another cross again, but we're still in chop slightly at the minute, so we haven't like recovered the bullishness that was there before. We've gone into a little phase of chop just here. That makes sense following on from that rise up. This low in the MACD, this low in the RSI, interesting stuff. It is of course lower, and the low is lower than those previous lows just there, but that's the 4-hour time frame, banging this up towards the 24-hour time frame, seeing how we're doing just here. Right, that's like that. There's not going to be bullish divergence on that one. The 12-hour time frame going in between and looking, and it's not quite hitting bullish divergence, or is it? No, it is. Kind of just looking between these lows. Yep, kind of getting this to correspond a little bit more for us. 6-hour time frame. What have we got on the go? And yep, it's starting to look very clear there. So yeah, so we're seeing that picture in terms of the shorter term picture, giving us that winding of the coil for the spring, and we still have that target in mind up above, of course, up towards $27. That's another 10% plus chunk up from where we are now. Been wonderful to have carried this on the way. Now, if we do take out this low at 22, again, very much an area to manage your risk at, because the risk at that area changes to a disproportionately greater risk of another 10% drop off at that particular price point compared to, say, 22.90 or whatever, or 21.62 necessarily, you know, and then you're looking down towards that $20 area again for your next buy price, if that were to be the best case scenario for us on that front. 24-hour time frame though, you know, we've got that, all those scribbles in there. Between the next show, we'll have to kind of clean up the charts a little bit. 24-hour time frame moving up the way. We've had a low here and then a high, but is it a bit much to say that? Hiding off all those squiggles, you can kind of see that that's a little bit much to say, so a little bit much. So we should really be careful and aware that if the prices do push down past certain key areas, so past that 21 area, we would really need to see support coming in at 20, because if it doesn't, then we're moving down to $16, $17 again. That's where the 618 is, and I, of course, will be looking to buy some for me at that price point, because that's what I'm looking for. If we do drop down the way, then, of course, already having my link position bring me up towards this point anyhow. So the markets have opened. I'm aware of that. Probably someone tell me in Super Chat just now could sort of pull my thumb out. How are we doing? So what are we doing as well at this point? We're at the bottom of the hour, so the markets, of course, have just opened, and we're looking at Gamestop, AMC, and other stocks as well if you want, and we're going to try and establish, of course, what the opening range is here. So that's what this is, and it's great. That's what we're doing. You could call this section, I suppose, of the show, what is the opening range? And we're going to find that out over the period of the next 15 minutes, really. That's how you find these things out. But where is the opening prices? What time frame is this, etc.? Bring some clarity to the story that we're looking at just now, Rocky, and put me in a position to know what's going on. Well, this is a 24-hour time frame, indeed, you know, the daily time frame, and we can see that in terms of this one, we're starting off without any gaps on the chart, bringing that down to the 4-hour time frame and seeing that again, no gaps in the chart. A doji there, finishing off Friday's price action with this sort of little candle, and then this current one, a doji, and then going down to the smaller term time frames, 1, 2, 3, beautiful, looking like no gaps on that either. Nice, healthy, normal, organic price action. Looking down towards the 15-minute time frame, getting a much clearer picture of the micro at this point. Now, if you are looking at a lot of different trading technical analysis out there, people will be talking about how you can do swing trading using the 15-minute time frame. Yes, that is kind of, you know, kind of like a stupid thing to say, but people say it nevertheless, of course. Anyhow, whatever, 15-minute time frame is still just really an intraday time frame, really, you know, in terms of like proper swings in the market, especially if you're talking to the people who are new participants in markets and want to know what they are talking about. So that's how I'm going to talk about it here on my show. 15-minute time frame though, showing us that we have pushed up a wee bit and that there is still this great big wedge on the go. So you are starting to get to that point where you can make those bigger kind of assertions that we were doing before on larger time frames, a bit more zoomed out, but you can see it here for us. And then in that sense, I'm going to just draw in using all those highs there for the wedge and say in this sort of scenario that we could be in a position where we are kind of testing this, having broken out, come back down, done the retest, done it again, double bottom at this point in time. Are we then able to turn around and start to move towards the top side? Well, the management of the risk in this scenario, again, very easy just now as prices are opening up. And what we're looking to for the day, for the week, for everything else, right here is obviously at this $150 price zone. That's what we're looking at. So the opening range of the day, having that incorporated into it is absolutely no problem at all. If it does want to come down and test this for us, we're happy enough to see that. But then if it wants to then actually express itself towards the top side thereafter, that would be neat. Looking at this and saying that we have, of course, got what is a lower low here on this time frame and a lower low on the RSI. So we didn't get that short-term tiny bit of bullish divergence on that little correction there on that front there. So we're just waiting to see how that goes now. So far, we are kicking about putting in a fairly tight one. Let's check in with our pal Popcorn Stocks AMC. And yes, in this phase of time as well, consolidating. So when two things are kind of consolidating, they're going to tend to do similar looking things. And then as well, when they've got similar market participants operating on both, you know, the institutional side, similar market participants, retail side, similar market participants on both of these equities, then of course you're going to see a degree of correlation of movement, and we've got this consolidation that's happening now. But this consolidation is much more like, you know, positive for this one. In terms of the lows coming in, higher lows, in terms of the lows coming in there, but then much more negative as well in terms of these, in terms of the highs, not really taking out those other highs, etc. Well, actually right now we're doing pretty good, and we're coming up towards this 33 price point, and this is what we've been looking for the start of the day. This is the setup. So, you know, can we get above 33? And that's the question for us. So in terms of answering that, are we still in the right place, the right mindset, the right place, the right price point to be at right now? Of course, bing bong, the price is wrong on both of these. But in terms of like, are we still on track? Are we doing the things which are okay, correct, whatever to be seen in this region? Well, yes, we are, as we almost inevitably see a bounce back from that yellow line that I've got on there. The question, and the reason why I'm saying that answers that question, is price-led on this one. As we look at the prices hitting that yellow line, are we doing what we want to see happening? Yes, we are. We are slightly below it. Okay, the prices are likely to have a little bit of a buck, you know, or a half a buck, or 30 cents or 20 cents inflection just here. But if we can push through this zone, then we start to feel a bit more excited about it. We're doing what we want to see happen. That's the thing with this one. We're doing what we want to see happen. 36 minutes after here so far. So that's good, and we're starting to push up above. So we've got the first 5 minutes done for the day. Flick down the time frame, and you can see the first 5 minutes took us up to that position where we could ask that question. This current 5 minutes is in there challenging it. So this is an exploration, if you like, in the micro right here as to what it is for a level to be broken. Now, for this to be broken, you'd need to see closures up above it on a decent time frame. We're looking at something like maybe the hour, at least the 15 minutes. The 5 minutes just certainly isn't going to cut it. But we have the 5 minute time frame up right now as the prices are pushing on beyond it. So that's really, really good. It's really, really good. But it brings in the question of, can we start to see this close above it and get it to be support? Because what was formerly resistance, as you're doing your technical analysis and you're trading, and you see prices moving up to testing, moving past a certain level, they are support becomes resistance, resistance becomes support as you break it. So the question really boils down to, have we broken it at any time? And we're pushing past it right now. And even though this is a very girthy candle up above it, yet we're going to say that we're just testing it as yet, and we could absolutely see a pullback. But this is perfect so far. We're definitely seeing what we want to see happen. We've actually just taken out the highs of this region, which is very, very, very good and strong, and puts us into the bigger question area again of, can we push past this overall formation? Will this on another time frame perhaps look like a W? We've moved up towards this area and put in a twin top so far, seen a pullback from here. So the idea then that there could be resistance in this zone from which we pull back to retest this orange line is conceivable, and we're waiting to see if that's going to happen. And this, by the way, is, as I prefaced it, the discussion about the opening range for the day. So we're going to actually come back here and take a look at that in another minute or two, just diving back over to GameStop to see its opening range and has it been doing something similar. And oh, it has, and it's very, very positive and very, very strong, and it has done it without any of these gaps. That's fantastic. That's exactly what we want to see, and it's what we asked for. Thank you so much. So I was tired. Some of you were tired a little bit. I don't have my coffee. I don't have my tea. I was going to make one earlier on, but I forgot again about that. Damn, should have asked Jimmy to do it when he was here. Darn it. But what the one sort of request that we actually made, can we see the prices putting in a bit of positivity at the start of the day for this opening range to make it so that we know that we've got that enthusiastic day for us? Well, yeah, so far we're doing what we want to see happen. And isn't that a good thing when the world seems to think negative stuff? Perfect time here. What we're going to be doing here in the next little section of the show, as we get to 40 after, is we're going to be taking a look back over at a little bit of news and talking about a little bit of a concept, which is, and it's perfect time to do it as we feel properly positive with the markets, it is talking about the kind of the negative side on GME. It's something that might cause some people some anxiety, but I want to look at it from my point of view and why this is actually a good thing. Okay, so that's great. We got that coming up, and at 50 after, we can take a look at those cryptocurrencies that we were talking about, bringing us right the way through to, of course, 10 a.m., I believe, if I get my American time right, and the markets will have been open for half an hour. We can see what that opening range was then, check back in with GME and AMC at that point. We're seeing a little bit of a red candle just now. We're all psychologically prepared for what we have been talking about. Please do bear in mind that when I do these episodes, I am, of course, a professional, experienced trader who's genuinely trying in every single moment to enhance your perceptions in the market, to empower you. None of this is about me. It's not for my own glory. It's absolutely about you, my relationship with you, and your experience in the markets, and trying to make that a better one every single day. What's that news story that you were talking about? Well, it's this one that came up on some news website that I was looking at. I don't know these guys personally or anything, you know, I don't know I've never read Finbold, Finance in Bold before, but this will be a mentality that's kicking around in a lot of the markets. Somebody's saying that GameStop stock forecast analysts project 41%, 42%, let's round it, downside for GME. Now, I'm going to talk about this in terms of why this, of course, is a good thing for the retail market, that this is a discussion point right here. And I'm going to point out a couple of things from this article which I think go towards telling the story of why this is maybe, you know, not only buy the rumor, sell the news type mismatch on this one, but this is like the news of the news. It's not only is it that is the person here working off the back of some rumor and putting out some news, he's working off the back of some rumor that led to some news that then he's trying to create news off of. And well, I don't know, in some senses, if you're going to get a bit meta on it, maybe this is the rumor which leads to the other good news down the line. And what are you talking about, Rocky? Well, First off, in terms of the actual charts themselves and what we kind of need to see happen on a big scale for the prices to move up to ridiculous numbers. For example, here on GME, we can talk about how the prices need to go up past, and I'll just bring up a bigger time frame chart, these big areas of inflection in the markets in order to go into really crushing the hedge funds, crushing them, pushing the prices way beyond what people are able to anticipate, and everybody then thereafter pumping out these news stories where we already knew long before that that's where the things would be happening at. Same sort of things happening down here where you're getting these news articles coming out which are so, pumping the bearish side when, of course, we'd anticipated the markets perhaps moving down here even in advance of them doing so, and, we're psychologically prepared for that. The next thing about it is like looking as well, in terms of liquidity. We need in these inflection points for people, whether they are human beings that work in an institution or foolish, misguided other human beings that relinquish their positions at local bottoms in markets without actually really properly using risk management rules to actually do that. So people who aren't managing their risk and who don't manage their risk, well, let me be quite frank with you. Retail traders tend not to manage their risk, and then the generalization of institutions, they tend to not manage their risk. They manage it very badly. Like Archegos Capital, of course, the family firm that went bust that we remember, managed their risk incredibly badly, did they not? I think you'll agree they did. But Credit Suisse themselves, that put out that report about them, said that not only did the Archegos not manage their risk, but Credit Suisse themselves enabled that and managed their own risk so badly that they're still currently exposed to so much of the problems that Archegos put on them. And that's one big chunk of liquidity. And what we want to see is more big chunks of liquidity coming in, even if those are coming from people who are otherwise, misguided former apes or whatever. It's all good. We are enough. This is you. This is me. This is all we need. GME over here, of course, and AMC. So that's my opinion on that news article. Now, of course, just to kind of give you, I did read the thing. There's elements in here where you're talking about a number of different analysts. He's talking about a number of different analysts over a period of time and how they'd been saying that things looked negative. And, well, to be honest with you, so had a lot of us, including smart retail apes, who were saying, be cautious, be cautious, be cautious, be humble. Right up until points like this. Now, what we want to see happen, as I just so happen to be on the 3-day time frame here and seeing this green candle and just saying, well, this is the time when you want to have those articles coming out, because, of course, if you've watched the channel for quite a while, you know that I talk about a concept here. This is really bad drawing. A concept here that I like to talk about, and that is, of course, us, the fisherman here, fishing with our fishing rod and trying to catch us some fishies. And if we're looking to catch these hedgy fishies and actually, get that liquidity and move towards the top side, then of course, then we, as we put our crazy smile on our faces, need, of course, to have that reason, that actual potential, get your teeth into it reason for things to have gone. They need the reason to be investing in the short side, right? The risk up to this point was less than the risk for them now at this point. So you need to enhance the perception of diminished risk, whether that is relinquishing your position at this point here or indeed adding to a short at this point here. You need to enhance that risk. And how do you do it? Well, you can directly pay people to make the articles, or you can actually just use the most common and the oldest trick in the books. You rely on the ineptitude of the journalism field in the first place. They're going to get it wrong. They're going to be late to the show. They're going to do things at times where not only do they misinterpret previous news, which wasn't a rumor even then, as being a rumor, they're going to then present their own work as if it's the rumor rather than the news itself, in adding layer onto layer onto layer of misguided analysis, which actually pushes retail that is sensitive to that news in the wrong direction, enhancing the risk profile for staying in the trade, and of course relinquishing that capital to others who are looking to turn around their bigger accounts in an environment where you're seeing extremely low liquidity across a period of time. That's what's going on over there with that one. So we are looking at 47 past. Right, great. Okay, so we actually still have a minute or two that I can spend on this thing if I want to. And I just want to point out a couple other things then that they said, such as how the volume has been low, and the, what did they say here is with the volume? I should have highlighted it, I guess. So it's worth mentioning that GameStop's trading volume has maintained pretty consistently similar sized trading volume for months, indicating the stock may not be as highly volatile as it has been in the past. Well, actually, you know, that's that classic thing, right? That's that classic thing where people are not necessarily able to understand that while the volume has been similar, the moving average very much shows us that it's been, of course, diminishing in the face of downward trending price action, as opposed to doing what is a very simple classic rule from sort of the very first pages of your technical analysis book, saying that in the direction of the trend, you want to see, of course, the increase in volume going along with it to give you that confirmation that, of course, that's going to happen, that's going to be the right way to go. Coming towards pivot points in the market where you had your previous lows, putting out your article before trading on the Monday, analyzing everything before, thinking that you're on the crest of the wave of the news, when in actual fact you're wrong. So that's what you've got over there, Mr. Financial in bold. And well, let's just see, as the volume moving average just slightly starts to kick up a little bit, getting that big chunk of volume that came in there on the 30th of July. It was the first time there was anything different happening. And of course, if we do see diminishing volume, all it does is makes it incredibly easy for the book to be bought up. And of course, when things move towards the top side, you start seeing the momentum coming in. And if you start seeing the momentum coming in and the book being so easy to buy up, then what you're going to see people wanting to do that. People wanting to do that means that you're going to see volume, a big volume candle at this stage after such an extended period of downwards price action would be stopping volume at this stage, because the volume has been diminishing the whole way down here. That if you got that happening as the prices moved up, or you'd be calling it starting volume perhaps in terms of the starting of the upward trend, this would be when you'd be looking for that as a confirmation for the alternative case to what the guy is actually proposing in the article. So that's where we are with that one. So yeah, 10-2, great, excellent. That is 50 after the hour. We can take a look therefore at my friend Tezos technical analysis here for a couple of minutes and see how we have been getting on. Where did the prices come to? Ladies and gentlemen, where did the prices come to of Tezos? Where did they come to? Let's just see. Have you been watching the channel for a while, and have you been trading this one? Now, if you haven't been trading it, I don't think that that makes a difference. The question really here is, have you been watching the channel for a while? You could probably guess the numbers. I talk about this a lot on the show. If you pay attention during these crypto technical analysis sections, then you will, of course, know all about it. Seeing the prices having come up towards the let's see, the body closed over here on the 3-day time frame up there at 340, etc. Just jumping down to the 24-hour time frame, make this a bit clearer for folk. Thanks so much for that donation. I'll check in a second on that one. You can see, 345, etc. Oh, what's that? But what? The prices on their wick went all the way up to 353, and we were talking about the 350s as the target on this one, and that's where the prices went to, and that's the value that gets put out on this channel all the time, every single day, and you tune into it. Wow, whether or not you trade this coin, it makes no difference. What I do here is I teach you self-reliance, I teach you skills that you can use in the marketplace to enhance your trading, no matter what stock, commodity, forex, pair, cryptocurrency, anything that you happen to be looking at. Hopefully as well, life lessons that you can take into other arenas where you operate, whether that's finance or just certainly in terms of your morality and being a decent human being. But as we look at the charts here, you can see whether you trade this or not that there has been lessons to be learned in terms of where we went to. Well, we're still asking questions about this one and whether or not we can get continuation towards the top side, seeing that we've actually had support coming in there at that 236. Where was that? It was in there at $3.11, bouncing up from there thereafter. We're in at 330. All the threes going to be this midterm pivot point for us if we are looking on the small term time frames. Jumping down to them, therefore, this is the 15-minute time frame. This is, of course, extremely rapid in the crypto world. Our range to be looking at is actually laid out quite nicely with the purple line towards the top. I can see actually here evidently that when I drew in my fib, I drew it in ever so slightly wrong in terms of where that went up to. And then the green line at the bottom. Let me just line up that fib a little bit better here. Where's the... I can't find the tool to the button to change that, so I'm just going to use this instead, a new one. It's because I got the magnet tool on. Right, that'll do. So in terms of the range that we are looking at on this one, staying above the 310s is going to give us that satellite state area, you know, between the USSR and Europe of sort of Lithuania, Latvia, and all the rest of it. That's that 3 to 10, you know, flat $3 up to $3.10 zone. That's what we're kind of looking at with regards to this one. If we are going to be kind of managing risk in there, that's the lower end of that range. The upper end of that range coming in there at 353. Massive amounts of trading between those two prices, right? Because look, you know, you're looking down here and you're saying 311 up to 353 in terms of a percentage move. That what you're talking about here. And thanks for that donation. And I'll just actually check it now in case it's somebody saying my mic is broken. Quite sweet, cool. Oh, right, I will in a sec, Sal. Thanks so much. Thank you. Right, so between these two zones, that's that. You're talking about big percentage movements. What was the big percentage movement? You're talking 13% move, so like that's pretty big. That's like the prices of GME going from 150 up to $167 or something like that. You can feel the movement there. That would be a big enough movement. There's trading to be had in this zone. We're actually in about the middle of it just there. What's the chat say here? TY, Rocky for all, yeah, you're absolutely brilliant. Thank you so much, Minner. That's really appreciated. H Jones donated $4.99 through Super Chat. That's really wonderful of you. Ari, thanks so much for that. You fantastic human being, you. Much love. Epiphany Christie, our new moderator, had a request for Terra Luna for the crypto section. Ooh, interesting. That has been a good one. And of course, we did some decent TA on that one recently, with myself actually saying at the time, as we come 55 after, I'll be making a cup of tea here and coming back again at the top of the hour in just a second here. So don't go anywhere, because of course I'm not. I'm just going to nip over there and boil the kettle. But of course, we talked about Terra recently and how I myself was trading it, and how I'd taken profit in there at around about that $9 area where risk had increased, and then saying that if the prices were to then actually take out those areas, I would be aiming up to the next area at $14. Wow. And we still have another target higher up of $18. So we'll check in on all of that. Thank you for that shout out, Epiphany Christie, and for the $5 as well. We all really appreciate you here, every single last one of us. We really do. You keep things ticking along nicely. Sally Mander says here, though, I'd like to request you go get your coffee refilled. Some TA on your coffee process would be great. Right now here, I'm just going to make a cup of tea real quick, okay? I'll not do that with the coffee. I actually don't have the coffee making thing here. I mean, I need to get my percolator out and all the rest of it. Stop letting Jamie keep it all, but I need to then go down and grind the beans. Don't know, maybe I'll just buy myself a coffee machine. Maybe not, because I have an addictive personality. So we will see about that. Right, so don't go anywhere. I'll be back in 2 minutes. I'm just going to make a cup of tea, and I'm going to leave the chat up and the charts up on screen. While I'm gone, if you want to send messages in, of course, you can talk to the bouquet flowers behind me, or indeed to the ghost of Rocky sat here in this chair. I'll be back in 2 minutes. Certainly don't need to stand there while the kettle's doing its boiling thing. Thanks so much, Sal, for giving me that reminder to, of course, hydrate in the nice way. Whoa, whoa, whoa. Seeing little things in the chat as well as I watch the show along the way, so I'm just going to take a second to give shout-outs to people. You've got the likes of Observe Thyself, Irem, Katie in there. Fantastic, wonderful people. I really do appreciate all the audience out there, every single last person that tunes in, and of course as well everybody. I want to massive shout out to the wonderful people out there that make this a fantastic community. That is of course all of you. There's such a massive range of diversity out there as well, and I absolutely love it. We've got different genders, different colors, different creeds, different locations, everything around the world. Truly fantastic global community of people all looking to individually help improve their own lives, and together we make up a cohort of good, proactive traders making the world a better place around us. The kettle's just boiled, so I'm going to go make that tea. And here we have it. And a little shout out to K-Doc, his wife, and to everybody that tuned in back in the day to one of my episodes, the first episode of the live show, which I called The Rocky Outcrop Show. And of course it was a review of vegan cheese. Now, I actually have a new brand of vegan cheese here. It's made Vitalite. It's the Vitalite brand. You'll know that if you live in the UK. I wake up in the morning saving for Bressa. Vitalite. And you'll remember that brand. They, of course, make fake butter. And the fake butter brand have made a fake cheese. And it's quite an interesting one. So I thought I'd bring its attention to you. I looked at it in the packet and I thought, is this another Violife knockoff? And then, of course, I took a taste of it. Light, nutty flavor. Certainly actually has tastes of that Vitalite type flavor, which is an interesting one. So for all the vegan cheese eaters out there, they might be a bit interested to know that in terms of how they've approached this, they've leaned a little bit more into going for perhaps a buttery type flavor to the cheese, as opposed to the kind of Cheetos Wotsits, but not even that good, fake cheesiness type taste to it. Giving it a little bit of a nutty flavor, a kind of overall buttery type effect. It's quite nice. It's a similar sort of consistency to Violife. So it's got that springiness about it. I've not meddled any of it yet, but that's an interesting one. Right, cool. Hey, a little bit different. I like my vegan cheese recipes. By the way, if you wonder what I have in my milk as well, in my tea, it is almond milk. Why? Good question, right? So yeah, back on with the show. Thank you so much to everybody for sticking around as I got my cup of tea, and we can check then. We're at the top of the hour here. It is 2 after. So was there any other news that I wanted to get out there? Well, there most certainly was. We're seeing that the DTCC has enhances the ETF solutions with automated collateral management processes. What we're seeing here really is that the mechanisms, the sophistication at the DTCC, the NSCC, they're growing. You've got sophisticated rules, sophisticated legislation that continues to be enhanced and improved on in an evolutionary process. You've got the mechanisms behind the scenes which allow for enhanced and more rapid solutions to be delivered with regards to things like, here we have collateral management processes. Now, one of the things about it, what is happening here is that there's the NSCC's new solution, as opposed to, you know, the just like straight up the DTCC, is the subordinate body, the NSCC, that is actually doing this one. And it says that it will create and process, create and redeem instructions, generate payment orders, and ensure collateral is exchanged between authorized participants, servicing agents, all within a no-touch process. So this is quite handy because the NACC is already the clearing, right? So, you know, National Securities Clearing Corporation, they clear this, which means that the money's coming into them, and they're kind of, you know, assigning things themselves and acting as that counterparty. And so they have, you know, monies that they're able to kind of allocate to the right places without having to have the touches required by, you know, sending it out to somebody or saying assign it to them, and them kind of saying, well, I want to pay off this with it, I want to do that. Assigning the collateral better, and it makes for an innovative solution. It automates the exchange of ETF collateral, which was previously a manual process, which was done outside of the NSCC, which, you know, then of course exposes it to that volatility in the markets. If time goes by and somebody can't meet their obligation, then they become a counterparty in a risk framework. And really, since 2008, the markets have been, the evolution of the market has all been geared towards removing that systemic risk as much as possible. And perhaps then at this stage, as we get to 5 past the hour, we can follow that section up with the with a look at the SPY, okay? Because we've been talking a lot about how there could be a big crash in markets, and there's a few things that we could talk about here with regards to the SPY. Are we looking at the potential for us to see a big crash? I think the answer on everybody's lips hearing that question is yes, right? What do you think? Let me know what you think about it. Okay, do you think we're going to see a big crash? I mean, and also as well, we don't need to be like the kids on Lord of the Flies on the island. We don't need to be intensely positive about massive negative stuff happening in markets. You know, it's like, if you are in the crowd of people who think to themselves, yes, there could be a market crash coming, and it makes me scared. You know, what about the charities and the social organizations which will go bust? What about the people who depend on these jobs to feed their families? What about all this sort of stuff? We don't want to see it happen, and I think that's probably a fair enough, human enough thing to admit. But we are the retail traders, and the fact of the matter is that these crashes are brought on and have always been brought on by the larger institutional players. Always has been the case, and it always will continue to be the case. So I don't think that so much that we're celebrating the crash, just so much celebrating being in a position where we might actually be able to anticipate it, perhaps for the first time in our lives. Now, if you've lived through the .com and the housing market crash, then that probably puts you in a position where you've experienced at least some personal drawdown in terms of your life, perhaps catastrophic level. And it would be nice to be able to be more aware of these things happening now. You also happen to possibly be trading in a stock which has got a low correlation in a sense, or at least maybe might operate contrary to the rest of the markets and might protect you personally. But there's no guarantees in life, etc. And maybe instead, just in terms of the here and now, we could do a quick look at this at SPY and discuss these concepts right now and where we are just for a couple of minutes. It is right here, right now, 7 after the hour. Maybe I'll talk about this for a few minutes, bringing us up to about 10 or quarter past the hour, and we can then start to go forward to wrapping up the show. Then I will be finishing off at 30 after, so the bottom of the hour will be the end of the show for me, and I'll be doing Luna technical analysis at least for 1 minute along the way beforehand. So if you are looking for any of that, then please drop me in a message. And of course, let's face it, I've been trying quite a lot here with this format today. So whenever you write a message into the chat, I might not see it at the minute. You know me, it's definitely not for lack of trying. But we'll see. If you want me to look at something specifically, you're probably going to have to drop it in as a super chat. Okie dokie. Well, this is the SPY, and what we're looking at right here is, of course, a bullish market. It's been incredibly bullish, really, ever since the word that shall not be mentioned that happened last year, which led to, of course, a very big set of changes in the markets back then in March. Ever since that bottom, we've really put in extremely positive price action, but we could be coming close to a period where that actually ends. Looking at it from classic ways, such as, have we arrived at a key market area? We're at the 1618 price point now. Oh my goodness, we're at the 1618 price point now. That is, of course, something that means a lot to the financially articulate amongst people. But what it means, if you're not aware, is that we've not only have we recovered 100% of the losses that were experienced in the financial crash last year, which was a crash seeing 10 years worth of price action happen in the space of a couple of weeks, bringing the markets down 50%. A huge drop down in the markets. I mean, this was 35%. 35%. Sorry, 50% was the 2008 market crash. I got that, just said that wrong. Ad-libbing here, it's hard. Right, yeah, we're up down 35%. Huge impact in the market, right? Massive and extreme. And we've recovered all of that. And then some. Not only have we covered all that, we've covered another 61.8% of it. Now, the reason these numbers are important is because of Fibonacci stuff. And Fibonacci is this thing that is expressed in nature. If you get a number such as you look for the square root of this number here at 6.18, then you're going to be looking up to 7.86 is the next number along there, blah, 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 blah. There's mathematical reasons behind it. You see it in nature. And when people talk about how there's shells form in that particular way around the back of a snail, or the leaf has this many veins on it, or whatever shapes, and they talk about that big coincidency thing that happens in the world. That's Fibonacci. That's what we're looking at here, and we're applying it to charts. And this is the logarithmic chart, and I'm looking at it, and not enough people look at the logarithmic chart for a lot of reasons, such as that sort of foolish notion that you could learn anything about the macro by looking at the 15-minute time frame, and you're just not going to see that impact on the logarithmic chart unless you're doing that. I'm going to spend, as we are here at 10 after the hour, the next 5 minutes looking at this chart here, and this is SPY, and we're talking about really big hitting stuff here with regards to the potential for a crash in the markets, and it's coming in at a number here where it could be happening in terms of a pullback certainly fairly soon, having had this extremely important piece of information just be revealed to us, that we are at the 1618 Fibonacci retracement point, which may or may not mean an awful lot to you, but it shows us that we've extended another 61.8% beyond the recovery of the crash since, of course, that thing happened to everybody's health in the world. Now, if we did move down the way, there's a couple of key areas to look to. So if we just happen to bounce off this line, which, could easily happen, you'd be looking down to 424. Now, 424 from 441 is, of course, a 20 buck movement, and that is, of course, a 5% movement in the markets. And that's a very, very, very big deal when the 5% happens. You're like, wow, the American markets dropped 5% today. But that is, of course, just the beginning of the story. That takes us down towards the lower end of that wedge. If that wedge breaks, and by the way, all along the watchtower here, we've had bearish divergence, and I've been pointing out the bullish divergence and the potential to, of course, push on higher up. What we're seeing with our last low and the low before it, and the way that it's worked now over the last wee while, is that is starting to diminish, but if we did see a bounce here at that 420 area, you could get that bullish divergence and, of course, continue on for for another movement up. But if we push on past that, we're looking for a measured move that will actually take us down to the 384 level. And it doesn't seem like much of a coincidence then that at this point it starts to line up perfectly with the 1.272 Fibonacci retracement area. Indeed, the last time that there was any real volatility in the markets here in terms of SPY was back in that region. So if we were to move down past that, there's a lot of different things that could be analyzed, and I think I have not got them listed out here already in advance. For some reason I thought I had done that already, but it turns out that I haven't. But there's quite a few other ones. So if we're just looking between the lows and the highs, where could the markets typically move to? And I'll talk about that measured move in a second, but you can see here that there's the 236 is coming in at 375. So if I just go back a little bit here, you can see that the 1272 is coming in there at 381. And if I go forward then to the one that I just put on, that is of course from the lows to those highs, the March 2020 lows to the most recent highs, giving you that 1.618. You see that the 236 is coming in at 375. So there's a degree of kind of overlap there and kind of look into that region. And then of course our measured move is calculated by taking the range of this wedge here and popping it onto a breakout point. If that were to happen, where does it take us to? Well, it takes us right down to that area as well. What are those? Well, those are actually really bullish type recoveries. Where that would be, that'd be finding a low, a region where there was just a little bit of an inflection before. Of course, as we spoke about there, that was the last time there was any real inflection in the market. So there'd be that, but it's all-time highs in the US stock market. So that would still be putting us in a position where we've not got a massive amount of historical data, and you could be looking even further down. Now, there are other regions to look to, and one of them is a major target for a potential crash would be coming in at this line that I've marked out saying this is a buy. That's down there at 269. And if we take our measuring stick, how are we doing here? We've got another minute, I suppose. I need to wrap up this section. Take a measuring stick, that's a 40%-ish movement down the way, similar to what we had last time, and would be a major talking point in all the global markets in the world and kick off an awful lot of stuff would be happening, a lot with that, but it isn't necessarily the catastrophe of what we could be looking at. Now, the major market target, a major target for a potential crash starts to come in here where that blue horizontal line is, and you'll see that as I jump up towards the higher time frames here, the weekly time frame, and I actually take it from the low that we had recovering since the 2008 financial market crash. Now, if I pop this in here at the low down there in February 2009. Now, you may or may not remember February 2009. I certainly do, and it didn't feel like much of a recovery then in terms of my own personal life, obviously having had the full extent of the markets taken out on us. We were the ones that had to bear that burden. Then the markets did start to move towards the top side though, and eventually we all got to kind of get on board with that, and we can see that the 236 comes in there at 299. That's a rounded number at $300. I mean, the way that this is working out, and you think, oh, does technical analysis work, etc., and you see things like the 236 Fibonacci retracement point coming in there bang on at 299. It's not spooky, it's just the way the world is. But you can see as well that the markets could potentially push on down the way, and there's two targets to look to. Now, a potential target for this crash comes in here at 181. I know it's disgusting, right? Any movement, in fact, between 218 down to 181 really is that, but we also could look down as high, as low as 137. Bearing in mind that we're up there at 481 at the moment. If we were to go in for these styles of crashes, you're talking about a 61% movement down. If we were to move for that, that's that major line that I'm talking about in the markets just there. If we were to go on for what could be the biggest crash in the history of the markets instead though, then I'd be looking down to that 130 area, and there in terms of SPY taking off these key areas. Now, please, don't get too carried away with what I'm doing, which is a theoretical discussion right now to give everybody the preparation in advance. But look where this lines up with. It lines up with, of course, the highs of the 2008 and the highs of the .com. And if that were to be the end result, then what kind of story do you think that light ties up with? Do you ever see things in markets such as the highs in the .com crash, market boom, followed up by the highs of the housing market boom 7 years later, tying up with each other, then pushing down, etc.? Do you ever see coincidences like that? Well, I dare say there's one right there. Could we see that happen? We certainly could. I'm not going to actually start, pushing that agenda on anybody. It's just something to be bearing in mind. And the way that we're going to bear that in mind is by looking at, of course, this wedge, the measured moves, etc., the significance of 425, it's only 5% away, etc. Those things, those are significant in and of themselves, and we can respect that. And in the meantime, I suppose I can kind of finish that section by giving you that all-timer, old-timer, super important piece of advice that, of course, stonks only go up, bro. Cool, nice one. That's that section done, and we're at 17 minutes after, giving me time to check in with that opening range on GME just now because we wanted to see that. I left it a little bit later than perhaps I had. Well, no, we've already been back and checked on it a couple of times since. Now the AMC, the story that we had with AMC where there was an orange line, we've got this orange line here on GME. Here we are at 161, 162. Now the question is going to be whether or not we can break through that 161, 162 area. Some Elliott waivers are forcing the issue with regards to 162. People who try and predict the future, i.e. Elliott waivers, generally speaking, morons, by the way, because you can't predict the future. There's some news to Elliott waivers out there. But however, you can, of course, identify areas of inflection and risk. I've given out thousands of reasons why. I've given out at least 7 distinct reasons of confluence for this region. Elliott waivers are, of course, only able to see one at this moment in time. That's fine. That's 162. We've come up there and we've pushed up as high today at 163. I'm looking to see if we can take out that 162 region. At the time that we're up here now, I'm looking again to 155. Anything above that, super fantastic. I'm not even going to think about failing 162 until prices are below 150 again. That's how I'm operating on this one. Yes, those numbers like 5%, etc. are significant, but let me remind you that there's also bigger numbers out there. I'm going to be looking at the inflection points in the market, but that's where we are. We've got that positive start to the day. It's exactly what we wanted to see. I'm happy with the result overall, moving up towards that target that a lot of people would have obviously had. AMC, on the other hand, just clear off the drawing so I can see exactly where it is right now. Nice in there above 33. All the threes like we wanted to see. It rhymes for a reason. It's the truth. And we're above that just now. Fantastic. So just checking in then with how we actually did respond to the opening prices in the markets. We pushed up, very enthusiastic. We came back down, pushed right the way back down, then came up above the orange line. Ladies and gentlemen, do you see the value? If you don't, then of course you're more than welcome to GTFOH. But if you do, then I would suggest please do consider hitting the like button, because of course this is the value that I think people need to have in their lives. We talked about this up here. I was very much enthusiastic about the potential for us, but also understanding the movement down the way. Expressed that, I think, rather comprehensively before coming back here to audit myself and seeing that we did indeed close above this line here that we talked about, and so far we're doing quite well. It's a rather beautiful story. It's fantastic. I'm super proud to be here with you looking at this together, knowing full well that I'm imparting extremely highly valuable, life-changing information here. This is probably unique on YouTube. I know that I've looked across a lot of places, and I will tell you that I've never ever seen anything quite like what we do on the show here. GME as well, having done what we wanted to see happen, and it is a beautiful thing. Fantastic. That brings us to 21 past the hour, and I've got a little bit of some super chats to catch up on, and I'm going to do that just now. In fact, I got my coffee, Sal, so thanks so much, but it's tea that I'm having. And then we've got Totally Not the FBI donated $10 through super chat. $10 through super chat. Thank you so much for that, my friend. Let's just have a look at what he said. He said, I love you guys and Jimmy's DD. I'm waiting for funds to clear sometime today or tomorrow. I'm looking for a buy range to look for a support, assuming it doesn't keep running, if that makes sense. It does, and that is the perfect question to ask. It's kind of coming into what I was talking about a second ago. I'm going to assume you're talking about GME over here. If you're looking for a buy range for support, then of course it's going to be that 150 to 155 region if we actually cannot secure the 160 past 163 price point. Those are kind of where we're looking to. Below 150, I'm just going to kind of hold off, because the next clear area of support comes in at 135, and the next clear area of support after that is 120. So those would be the two areas that we're looking to beyond that, quite frankly. But to be honest with you, the 135 region represents where we had our previous lows. in terms of wicks. The body closures, of course, need to be back up here. So I would be hoping to see that there was a decent response at that 130 area, and it didn't push as far as 120. But 120 is where you'll also find another, the next actual level to look to. But that's kind of beyond what you're talking about. And really what you're talking about is today, tomorrow, where we are right now. And it's going to be this, the type of consolidation that if you're going to see consolidation, I like to talk about it like we're putting rocket in the fuel. So if you're going to be looking for that in this area, the question is, are we consolidating at, but just below support on resistance, just below the resistance, in which case you're looking at that range of 155 to 162 over the next couple of days. I'm not a financial advisor, none of this financial advice. I know that expressly sounded exactly the same as it, but that's what my opinion is about what I'm doing when I put that question into my mindset and think about what I'm doing, as opposed to some sort of financial advice, which is certainly isn't on this channel. Of course. Right, excellent. So Luke Spears dropped a what a fanny in the chat there. Wonder who that's in relation to. GME, what are you saying up there, Jimmy? That's how easy that's easy to forget. That's how easy it is to forget. Oh my god, I hadn't oh, you hadn't hit like. Woof, that's how easy it is to forget. What a fanny, says Luke Spears with regards to trade spotting. That's a lot of a funny. That's funny. That's funny. That's funny. The water in Nuri is carcinogenic. Aha, yes, that's. Wonder why somebody's talking about Nuri. My goodness. And Dan Wildo dropping in the tear faces. Worth his life. My message disappeared. But would you say, GME, that the reverse head and shoulders is now valid? Inverse head and shoulders valid? What are we talking about here? Quick look over this inverse head and shoulders at this low 50-minute time frame. Let's just bring up the chart so you can see it too. If you're talking about this here, I'll just bump it up to the half an hour so we get like clearer looking concepts on the go. And say you got this, you got this, you got this. This would be your neckline, and your range on it is going to be something like this arrow here. That's not, the perfect range measuring stick, but who cares? Popping that up the way, then you could say that in a lot of ways, then we'd already completed that. So while your conversation is beautiful and I love it, it also becomes somewhat moot at this point. And in fact, what we're looking for is the implications of it, right? So to go back to your question there, what did you ask, Jamie? You asked, Jamie, would you say that GME has the reverse head and shoulder is now valid? And well, it was valid. It was valid at the point of 155, which we kind of, we're hitting at, we're talking about before, and this would be a retest, and that's that 155 region. It was valid, when it was 150, we were putting in that right-hand shoulder, and we weren't taking it out. Then it was valid. So valid here, done here, waiting for the implications of it. So what are the implications? So Worth, my mate, my friend, the question that you're asking is wrong, okay? But it's not a problem. It's a good thing that you asked it. The head and shoulders was valid. It is now effing done, right? In terms of what you're going to get out of it. Now it is a question of what is an head and shoulders? What is a head and shoulders? It is a reversal pattern. It's not a continuation pattern. So what does that mean? If I take out this brush here real quick and I show you that charts are going like that, a reversal pattern is when prices are would then change and the markets start going like that thereafter because the direction has reversed, okay? A continuation pattern is when the markets are going like this and then we get a pattern in here and then, of course, the markets go like that thereafter. That's a continuation pattern. So would you see in this point here a head and shoulders connecting up these lines? No, you wouldn't. That's not how they work, right? Also, would you see up here a head and shoulders? This is obviously just an educational segment for people. Would you see a head and shoulders like this in this region just here? And then continuation afterwards. Is that what the pattern's implications are for it, etc.? No, they're not. Now, of course, you look at the chances. Now, 60% of the time, you actually will see this, which is where a lot of the confusion comes in from. But that, of course, is pattern failure. That's when you've got an invalidated pattern and confirmation that it is no longer the case, right? And then you're going to look at that continuation. What the scenario that we're looking at for this one, though, is, of course, neither of those. It is a downward moving market, followed by a inverse head and shoulders. And the question is, will we see in this market, what are the implications for it? So we've already gone through this. This down the way, that's not the implications of that. The implications of it, of course, are short to medium term reversal patterns. Short to medium term reversal patterns. So what would a short term reversal pattern maybe get us in this sense? Well, it could maybe get us up above that 162 area. The analysis boils back down to where we were before. So your question was good. The idea was good. It was slightly wrongly worded and conceptually thought of. Here's the concepts. I hope that helps with your sort of understanding of the dynamics of markets and where we are right now. And of course, it brings us right back to where we started off from with regards to the question mark in here at 162, 163. With the pattern itself brings us up above that area. Continuation and follow through then, of course, sees us with that short to medium term reversal pattern. And we can look to, for instance, measured move off the back of this wedge, for example. Or we could look to a Fibonacci retracement against the highs to the lows, for example. All these targets. And that is how you trade. That's how you trade. That's how you understand the markets, and it's how you communicate with the markets. So if you want to communicate with me about markets in a way that actually reduces the friction in my life, that's how you do it. So, nobody really tends to do that. No, that's not a big deal. But people don't tend to do that. People tend to talk about it more in the way that you were talking about there, which of course then means I need to engage my brain and put in that friction and say, well, where are we? Where are the tires really hitting the road with this idea? Where are we getting the traction with this idea? Where's the slight, deviation away from what we should be thinking about, etc. Brilliant stuff. Thanks for the contribution, by the way, with that question. And I'm sure there's been millions, no doubt, like that throughout the chat today. It's just happens to be that that's one that I picked at that particular time. No, favourites being played over here. So Andy A says 9 weeks with only one green on GME. All we did was buy more shares. These guys are so screwed. That's it. A long time, a long time. Here's the weekly time frame. A long time of red candles happening here on this one. Right. Anyway, so it is now actually the bottom of the hour, and I'm supposed to be tuning out. Therefore, anybody who actually wants me to take a look at anything now, it categorically, unless it's a super chat, it's definitely not happening. I'm going to just jump over to take a look at Luna. This is Terra coin, Luna USDT. This is another coin which is concerned with making the synthetics in the cryptocurrency market. Now, that's an interesting word for you. It is, of course, in a trustless environment. So somebody who's never heard of cryptocurrencies before, and you hear synthetics in a trustless environment, boom, right? Am I right? That sounds scary. Well, this is one of the things, and of course, perhaps one of the reasons why Gary Gensler and etc. is concerned with cryptocurrencies. Now, Gary Gensler isn't as much of an expert about cryptocurrencies as, say, me and you in the audience we already are, but he is a anorexic-looking guy in a suit who's white and tall and has dark hair, and let's just say he's probably in a position to do more about making the changes of cryptocurrency into the market than we are. He likes to look at a very broad theoretical point of view. But let me just explain to you then here what that means, this concept of synthetics and the concept of trustless, just for a split second. Now, we know about it from short in the naked shorts on GameStop and AMC, that there can be these synthetic shares that are made up, but it's all very much in a black box and hidden off from us, and we don't know what it is and where they are and how many there are and if we have them or not, etc. And it all relies, therefore, on trust. Do you trust your broker? Do you trust the DTCC? Do you trust your market makers? Because, therefore, if you do, then you've got nothing to worry about, because the monies will be in your account. And of course, the dollar bill itself then kicks that back up the chain itself, and is saying, well, you're relying on the federal government thereafter. You trust them, then you trust the dollar bill, and if all else fails, you trust in God. And that's kind of the way that goes. You're never really going to get anything hard proof on it. Trustless in the DeFi and decentralized the cryptocurrency markets means something entirely different. It means there's no requirement for trust. You don't trust. You do trust. You always trust, because there's no need for trust. Trust doesn't make it into the equation. It's all worked out in advance, and nothing can stop your contract from succeeding. So people need to put up margin. When they put up margin to create a synthetic, that margin will be used at the time that's needed to cover the cost, and it is in a trustless environment. So you know that if you've got $10 lent out to somebody else out there in the world so that they can do something with that $10, that there's always going to be a cutoff point when you get your $10 back, and there's no need for trust. Oh my goodness, this type of system is able to be set up using mathematics, cryptography, and the ability to use a distributed public ledger which cannot be hacked and is absolutely verifiable to make sure that we've got an environment that can operate without trust. This is possible in today's environment already. We've worked this out. Yes, we have. And then, of course, there's a need for synthetics, because what you can do is you can open up, in the world of crypto, you can get collateralized debt positions. As a retail trader, you can have this thing, which is normally only open for institutions, etc. You can do stuff in terms of creating a coin with another coin, a token from another token, whereby you have access and the rights of ownership of what this other thing represents. But of course, you've got a different token representing that, etc., etc. And we have these concepts that are coming out, such as synthetics. And I do believe, now I'm not 100% sure, but I do believe that Luna is involved in that sort of thing as well. And here is the Luna chart for us. And Luna, Luna, whoa, 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 has done what we've wanted to see it do. And I'm just dropping down here to the 4-hour time frame and hitting the auto button and going back to when we came up towards the $9 area. Now, I said I'd taken profit at $9.50. Which was there. I believe, right? It was then. I took it at $9.50. Prices dropped back down to $8.23. They came to our green line. They took it out for like a couple of hours or whatever, but they didn't get any closures and follow through. We got one closure. We didn't get closures, plural, and we didn't get follow through or continuation at the previous highs in the market where we had our inflection point. We found support instead. Wow. So what did we do then? We went on to the next target, which I'd already laid out, which is $14. Effing hell, by the way. We actually went on beyond that. We went up as high as $15.60. So wow. We've pulled back now down to $13 as the low, and we've moved up a little bit since. And it puts us into a position where we're actually at before in the past. I want to just bring this up real quick here. This is the past now. This is March that we're looking at on the chart just here. March. See, pushed up to this price point at around 11, pushed back down to 10, came up to 14, pushed back down to 1270. Came on up to 16, back down, up and down, trending markets. Bullish convergence, bullish convergence, bullish convergence. Then we had highs, bearish divergence, bearish divergence. At that high was just the first time we pushed on. We got accumulation from people who were at the inflection point thinking, wow, this is brilliant. Things are going to go up more from here, because people were telling you that. Shout out to the likes of participants in the Bitcoin market like Michael Saylor, who isn't a real sailor anyway, who told everybody to push that the prices were going to keep going up always and stuff like that, and try to be bullish about things, but actually they don't give a shit about you at all, any of those guys at all. So it's something that I go to great lengths to demonstrate to people on every show, that I really do try to give a shit about everybody all the time, proactively. It's the only way to do it. You have to try. Anyway, this came in with this divergence again. It was as well still even more bullish divergence. We got two touches of it there. Big loads of it. Then we pushed back down past our previous lows, down the way, didn't recover them, and we got that confirmation. And then, of course, we didn't recover them here. We tried for a long time. This is March, all the way up until April, the whole month, trying. Didn't do it, pushed down the way. And then we, of course, moved on down thereafter. But we had this we had this Fibonacci in here, and we can see the inflections that were in it around about certain price points on this one, and the importance of the golden pocket as well as it came in there. Now, looking over to the right and where we are just now, we've actually made it back up into that same area. Now, I'm not going to use that Fibonacci from before, but I've left it on here, and it's interesting to see, I think, in terms of the movement between the 0 and the 236 that we've just done, which is between that $11-ish area up to here and dipping back down our toes between that $13 region there now. So bringing this up full screen, 37 minutes-ish into this episode. This is this Luna section, bit longer than I anticipated. I will be running the credits and running up and finishing off the show after this. But in terms of that, it's always important to look back and understand the dynamics in the market. Going up towards the weekly time frame here, and showing you that, of course, you know, this translates to a very much thinner picture. But I'm going to then take these Fibonacci's here and use them on the weekly time frame to come up with another story for us in terms of where we are right now, and that is, of course, beyond the 618 golden pocket retracement, testing the 786, pulling back down again. Supports at $12 is going to be my best buy price for just here. Managing risk with pushing down and cracking past the 1150 area, saying, well, no longer wish to be part of this, 1130, something like that. But if we're above that, then looking pretty good. Hoping to buy it at 12. It is green at the minute, but you know, like, this is where we are. And then looking up and saying, where could we go next? And I would love it if the overall bullish market did come back into play again, and we were looking towards $65 on this one. Bearing in mind that, of course, from where we are now to up to there, that's a 382% increase in price. That would be my target. I would, of course, be taking some profit along the way, because while I am crazy, I'm not so much of a lunatic to not think that I would take profit 155% up from where we are just now. Bearing in mind as well that currently I'd be looking to try and maybe get this in a bit of a discount even from where we are in this moment in time. I'll check that super chat before tuning out, of course I will, and I'll also do the credits and everything else. Looking at how we've then performed in this region, I've come up here and tested off these highs a few times at 786 and pulled back down, obviously done okay. Could we find their support in this region from where we are just now? Yes, we could. Where's our major inflection point along the way? Just here, and we know that it is, of course, that low in there at around about the $4. But if we push back down, we can see that our previous high lines up with the 236 point, and that comes in there at 1132. One of these instances whereby if you were to go in for that first area where you think, well, if it were to pull back to there, then that would be the best buy point, and then put your stop in, we're suddenly seeing that our stop loss would be coming in right at the area where you would expect the prices to be tested at. You'd be expecting it to go there. So from one perspective, you're like, I would manage my risk here. From another perspective, you're like, I would expect the prices to go here. Which means that what we're going to do is not catch the knives. We're just going to buy into the momentum when it turns around again. It's actually really simpler, especially when you understand the dynamic just here. And we would be managing any risk if we did catch knives, because we wouldn't catch knives until below $12. Then therefore at the $10 region instead, because that would be that particular sort of 10% you'd have to be managing your risk at that point, because of course the next higher low then therefore is likely to come back in even way down below. You're talking 30, 40, 40% off. So that's where we would be with this one, right? That's where we are right now. Other things that come into play, of course, you know, whatever RSI swing failures and brilliant stuff like hidden bullish divergence on this low just here, you know, giving you enough of an edge if you did want to try and buy into this and look for continuation just here. We had kind of relatively pathetic pullbacks along the way so far as well. If I just, instead of using that low, use these other lows like the kind of the departure point before, then you can see that the highs, what, still is 1230. You know, you're still looking at a decent enough one if you were to get it. Managing your risk in here is the crucial point. But of course, if we take out these regions, that's going to be looking up towards those $65 areas. Do you need to be getting excited about it right now? Well, so long as you're above so long as we're below this zone over here, really, we need to acknowledge that this is where it's going to get tasty. This is where you're probably also likely to find, you know, bigger picture bearish divergences coming up here for all-time highs in a liquidity area where there's massive square up for us. Something to look out for, and it's an interesting, curious one in the markets. I'd also take this moment just right now to point out a couple of things, such as USDT in terms of the markets here for us, where we've come from, where we're going. Those are the highs up there. Look how close Luna is to its market cycle highs compared to the others. So be very cautious in here, bearing in mind that $14 was a profit taking area, but we could be looking towards 18 just yet if we get continuation, which is why I've kept some of the position that I have. I'm not a financial advisor. We've kept some of it to go up towards those areas. And other things to look as well is perhaps Uniswap. Currently, with the sort of re-enthusiasm in the market, following on from that Ethereum, network upgrade, and we're still quite a ways away from where we were up here. By the way, this is a classic bear trap with a bull trap, with having had a pattern in the run up to it. Lovely looking stuff there. For information, if people want to find examples of it, there's one for us. Right, great, excellent. Going back over and checking in, because I know I missed a donation over here or something like that. It was a membership, was it? Oh, cool. Danko Bar, welcome to LA Supporter. Memberships and stuff like that massively help support the channel. Patreon is a really big thing, actually, to be honest with you. I really do appreciate that sort of thing a massive amount. Missed a couple of messages here. I'm seeing that Katie Bates was saying the FBI agent assigned to my Alexa must have been intrigued after hearing so much Rocky Outcrop from me. And observe thyself. Great explanation of what a head and shoulders or inverse, probably useful. Thanks, Rocky Outcrop. Thank you so much for that. Well, that takes us to the end of the show. It's been a longer one than normal. I'm a little bit more fatigued, and I can't necessarily guarantee that I'll be back again to do it tomorrow in the same format, although I aspire to, and to be a part of that morning process for you. Hopefully as well, this is something that gives people a bit more feeling of that continuation and that follow through in terms of the progress as I go through the show, in terms of what we experience, you and I together, in the making of this thing. There's elements I think I could improve on. I could be more relaxed at times. I don't necessarily have it to be this pressurized list as if I'm always working through the next thing, like a Pez dispenser with a huge arm on it. I can take breaks and I can take time to collect my thoughts, and it's probably worthwhile. However, I'm trying here very hard to come up with the really enjoyable, engaging, entertaining, and full show for everybody. It's been a pleasure today, everybody. Thank you so much for joining me, and let me run the intro credits and say thanks again to the people who donated to the channel, which of course is the lifeblood of what we do here. By the way, as well, for anybody that's new here, I'm a professional. The level of information that I give out here is extremely valuable, and that's what's going on here. So of course, when people donate and keep this dream alive, that's what we're all about. No shame in it. There's no, you know where the money is coming from. There's all complete transparency. It's all from you guys. It's like, that's what it is. That's why we do it. So everybody that does this now essentially is paying it forward to help people in the future. Thank you then, therefore, from me and future participants of the show to Frostcrest, Daniel Lesage, Drew Sol, Brock, Bad Mama Jama, OJ Minner, Ari, Epiphany, Sal, and Totally Not the FBI for your donations, keeping this show alive. And of course as well to Danko Bar, did I get your name right there, for becoming an early supporter and just chipping in here. It's the little bits like that that fill the cracks. Really do appreciate it. Extra shout out as well to Harriet. Really do appreciate all the work that you're doing. You're a wonderful, wonderful person. I think that you're fantastic, lovely, and a shout out to all the other people that take part on a daily basis. The reverse roll call, something that's a tradition on the show. Takes a lot of time. It's not what you'll see on your average show, but thank you so much. Lepton Inc., Kimmy Yo, hope you're enjoying the new job. Red Josh, how you doing, mates? Thank you again for your support last week. Massively appreciated. Jeroen, thank you so much. Christy, what a good guy. Fantastic stuff. I'll be remembering to ask the doctor about CBD when I go to see him on Wednesday off the back of your recommendation. Ape Hoddle, thank you so much. Dana Robertson, Dana. Something I should have mentioned today. Dana, the tradition of passing on passing on our personal experience as talked about from people who are spiritually inclined towards the Buddhist, Hinduism type traditions. I'm not too sure. I wouldn't talk about it. I would certainly be a lay person in that respect. I'm not an expert with any of that sort of stuff when it comes to meditation, etc. But I do understand the concept, at least a small part in Dana, in terms of what we're doing on the show just here right now. And that's amazing, you know, passing that on and seeing your name coming in there reminded me of that. I really do appreciate it. Of course, you were probably Dana. Thanks so much for that. Luke Spears, you're super generous of you. You're a really kind individual. And it, of course, is you and everybody else that keeps this whole thing, this whole boat on the road, the car afloat. Thank you to I Am Not a Cat. Meow, 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 meow. Thanks for tuning in. Of course, he's not actually a cat, so you don't speak cat language to him. Luke Spears, fantastic person. Thank you. That's that ding dong going off just for you, just there for that. Thank you again. Right, brilliant. Aaron, thanks for joining me. Always good to see you. Simon, good to see you. Finesse Finance, Andy A, Next Millionaire. Manifest Destiny. It's great to have names like that there showing that people kind of, you know, that are tuning into this thing support these sorts of ideas. I just, you know, am as much a passenger in this boat of life as anybody else is. You know, I don't really know the answers to sort of these sorts of questions, but if people can tune in here and believe in Manifest Destiny, well, it certainly is a vote of confidence in me and what we're trying to achieve, and I appreciate that. Dan Wildo, Tommy, I should say, sorry, as well. Thanks for tuning in. Tradespotting, thank you as ever. Banana Fridge, Chris Sweeney, Kimmy Yo, Katie Babes, Worth His Life, all my favorite colors, my sisters and my brothers. Thank you so much.